And while we wait for people to filter in, let's begin with just saying yesterday's commentary. The audio was terrible, so I apologize for that. And what I'm going to do is I'm going to pop in a couple of links here, because tonight we will be having Thursday night stock market futures live. This is a show that we put on every Thursday night. And what we do there is we go over the charts that we are looking for direction going into the new trading week. What does that mean? Well, Thursday night, we have one trading day left to go, which is Friday. We want to take a look at the weekly charts to identify how are we closing out the week, or how might we close out the week, because that sets the stage for the following week. And then we could begin to identify if we want to be long of this market, short of this market. And I just popped into the chat screen. There's a titanium level membership annual discount. Use discount code T50 because we will be having a membership mastermind group immediately after Thursday night stock market futures live. And that's where I answer the questions of members, review their charts. Basically, it's open mic night for members to discuss our positions or trades that they're interested in and whatnot. And there's also a link up here. Join our private group session invitation list. From time to time, we'll invite people in that aren't currently members just to give them a sample of what it's like. And people on that list also get a 15-minute email alert as to when we go live on the Twitter. My wife laughs at me all the time. On Twitter, on Twitch, and on Facebook. I don't think it carries through to Twitter. So let's bring this over here. I have a bunch of people on Twitter right now. Hey, Twitter. All right, so let's get to it. It is currently 5:02 in the a.m. Eastern Standard Time. This is a 4-hour chart, and we are breaking out on a 4-hour basis. S&P 500. Yesterday, a weekday, but for the most part, we traded in a channel. We held the lower band of support, unlike the Russell 2000, which broke that lower band of support. The S&P 500 did not. And it appears as though, at this current time, that the path of least resistance is going to resume to the upside. Now, yesterday or last night on Market Wrap with members, I discussed an entry strategy, or a strategy for adding to your long positions in this market. Now, it's obvious that this morning we are poised to gap up higher, absent some event. Do you go chasing this market? No, you do not. Why? Simply take a look at the 1-hour chart, and you can see if you chase this market, let's make an assumption it is 9:30 a.m. Eastern Standard Time. The market is just open. You decide you're going to buy this rally. You'll be buying the S&P 500 as it trades above the third standard deviation Bollinger Band on a 1-hour chart. Not necessarily where I would want to be, because when you buy, you're going to be feeling like Wile E. Coyote and hoping that you just didn't buy and you just ran over a cliff and the floor is about to drop out beneath you. Wait for a pullback. We have a strategy on Market Wrap for entering or adding to a position. So members, go check that out. It is on the website. Or go check your email for a link. I sent out a link last night. All right, moving on. You know, before I even go to the other indexes, I want to touch upon some, not necessarily news. I wouldn't even call it news per se. I want to touch upon outlook. You know, yesterday we had news that came out and I've been poo-pooing a trade deal ever since phase one, quote unquote, phase one was announced. And yesterday, stocks, soybeans, and yuan suddenly plunge on U.S.-China trade deal delay headlines. There's no deal. There is no deal. And how such smart people on Wall Street can keep buying into the hype that there's a deal on the table is beyond me. The Chinese do not want President Trump in office come 2020. They want him to lose. They want Elizabeth Warren. They want Bernie Sanders. They want anybody else that's going to rubber stamp their objective, which is to be the new center of the universe. And they want to take that mantle away from the United States. So why would they hand the president a victory? It doesn't make sense. So that is the backbone of my thesis behind the fact that there will be no substantive. Perhaps there'll be some meaningless agreement that'll be signed so they can have a photo op. Perhaps. But any agreement with teeth, it's not going to happen. It's not in the Chinese best interest, and they are playing a long game here while we play for the next photo op. Now, moving on, to stay on the topic of the Chinese for a moment, and the Russians as well. And it really just goes to show you the difference in mentality that the West has, not just the United States, but the West as a whole. Russia and China and the European Peninsula. This headline speaks volumes. Here is Russia and China. What are they doing? They're creating the Silk Road Initiative. They're creating economic zones throughout the world. The Chinese are colonializing Africa, grabbing up their resources. They are militarizing the South China Sea, protecting themselves. What is the West doing? The West is in a rapid decay financed by the central bankers. Because here's the headline for the Russians and the Chinese and this zone here: growth, development, the future, forward-looking. And here is the peninsula of Europe. And I never thought about it this way, but it's true. And not of Eastern Europe. They're fairly... they remember what it was like to be under Soviet rule. And they still have that capitalistic mentality, especially the Hungarians, the Poles, good people. Whereas on the Western side, still great people, a lot of good people. Sam, if you're out there, welcome aboard. But their governments are so corrupt. Good morning, Trent. They're so corrupt that... And when I say corrupt, I mean that they have been bought and sold by the bankers, the central bankers, the EU, Mario Draghi here in the United States, sequential, corrupt central bankers. There is nothing good that is going to come out of this policy with the exception of making the rich richer and the poor poorer. And while the Russians and the Chinese stock up gold, which is a fact, this is what we focus on. It's so sad. This is what we debate over in Europe. Should Europe bring back the fighters who left for ISIS? Think about this. Think about this for a second. You have, in San Francisco in the United States, you have people defecating all over the streets. A beautiful city. LA, the same deal. We have ridiculous debates. You have a corrupt... Marxist, I'm not even saying Democratic Party anymore because it's an insult to those who are simply 1960s liberal. It's an insult to lump them in with the Marxists that are trying to impeach the president right now when there's no high crimes and misdemeanors that have been made public thus far. So you have real decay in the West, whereas with China and Russia, while they are corrupt as all heck, they're forward-looking and they're looking to build an empire where we're just holding on to the last grasp of our last one. And it's very, very sad. And I'm digressing here a little bit, but at some point in time, the chickens are going to come home to roost, and in all probability, they're going to be accompanied by very, very high interest rates, and that's when the party comes to a very, very rapid and rude end in the West. And of course, when I say the West, I do mean the United States, Canada, and Western Europe, and probably a lot of Eastern Europe as well. Let's get back to the charts. So taking a look at, you can already see we started weakening up here a little bit on the S&P 500. Again, right now it's got a Wile E. Coyote moment. It has jumped the shark here a bit. Expect a pullback. At some point in time of the day, I will not go chasing this market. Moving on, back to a 4-hour chart. Let's move on. We'll keep the theme going with the major indexes. We have the NASDAQ. Trent, I just read they're going to drop tariffs. Maybe, yeah. If they do, Trent, we lost. Think about it. If you were the Chinese and you had tariffs lifted on you, and you haven't come to the table so far, really in earnest, and kept to an agreement, why would you agree to anything in the future if you don't have any tariffs on you? So if they do drop the tariffs or lift tariffs on the Chinese, we lost. We're done. It's all over. And what happens to the market? As long as the Federal Reserve is in there pumping it up, they're going to keep the party going here. But at some point in time, this is all going to come to a very, very nasty end. And I do not want to be net long of this market. So if you have a link, it would be great if you could drop that into the chat box. I'd like to share it with everybody else. So thanks for that, Trent. All right, so the NASDAQ breaking out as well, or has broken out this last 4-hour bar. Here was the prior upper band of resistance. That's in the rearview mirror now. Here is now our new lower band of support in red. And much as what you saw on the S&P 500, you have the same here on the NASDAQ. We're trading above the third standard deviation Bollinger Band on an hourly basis. It doesn't mean we're crashing. It just means that we've gotten a little bit ahead of ourselves, and that we need to take a pause, take a breath at the open, and not go chasing this market. Allow for a pullback. Watch the setup and allow that setup to come to you. Watch for the breakout. And again, members, we discussed our strategy yesterday on Market Wrap. Go check that out, please. Moving on. I suspect we'll see the same on the Dow. And immediately after this, and folks, if I didn't ask already, if I could ask you if you could please hit the like button, help support the channel. I'd really appreciate it. And click the subscribe button if you watch this on YouTube. Get alerted as to when we go live. Sometimes there's a delay of when we go live, so you may just want to use that link that I popped into the chat box, the VIP group, and you'll get notified of when we go live 15 minutes in advance of us going live by email. Yeah, the Dow has popped up higher. No shock, but it seems even more extended. Yeah. This is an hourly chart. All right, so I think that we're obviously breaking out this morning. No argument there. Whether or not we hold these gains and pull back, put in a higher low, and then rally onto new higher highs, that's yet to be seen. We did do a pullback yesterday. We tested support levels on the Russell and on the NASDAQ and on the S&P 500 where we filled the gap. So I'm not going to be the least bit surprised to see a continuation move higher here. Now, what has me disturbed about this market is the dollar and yields. And I want to pull back here for a moment. I want to talk about yields for a moment because we've taken note that this is a weekly chart of the 10-year Treasury yield. And we've had the Federal Reserve in there for the past several weeks buying up short-term treasury bills, 3-month, etc. We had a really good bond auction yesterday, which helped provide some weakness on yield, some strength in bonds. But the net observation is this, is that we are up significantly on the week, and ever since we began this new QE4 program, yields have rallied off the lows of 2019. So what gives? Why do we have a bid under the 10-year yield and even the 2-year yield? You could say that perhaps it's because the Federal Reserve is not buying longer dated maturities. They're just buying short dated. Okay, that's fine. I'll buy that. But why then are the 3-month Treasury yields higher? It doesn't make sense. So for whatever reason, you're seeing yields rise. And while, yes, they're off the highs of the week, they did put in a new weekly high this week. So something is off there. And even when you take a look at the U.S. dollar weekly chart, we've broken out. Now, that doesn't mean we're going to close there. We have 2 trading days left to go. Perhaps we'll drop. We'll go to a chart of an intraday. Scratch that. Let me rephrase. We'll go to a intraday chart of the U.S. dollar in the pre-markets in a moment. But on a closing basis, as of Wednesday, we have a dollar which is looking very, very strong and threatening, what's the high of last week, 97.80. And we have a new weekly high, a new intra-week high versus the prior week. So what gives? Why would the U.S. dollar, especially after yesterday's, it's still very early here, I'm on my first cup of coffee. After yesterday's economic data where we saw productivity drop for the first time since 2015, worker productivity dropped for the first time since 2015, while unit labor cost rose. That is inflation. Yet the dollar closed flat on the day. Go figure. What's keeping a bid under the dollar? What is keeping a bid under yields? Not quite sure yet. But with that unknown out there, where I'm not totally confident of what's driving the price action, it leads me to believe that there's something out there I don't know. And we have developed a strategy that has us taken out of our long positions of the gold mining sector. If we begin to see a continuation move lower, let's go to the daily chart, the intraday chart of the dollar. And again, the strategy will take us out of our gold mining trade. Should we be wrong here? We want to be humble and admit that, you know what, we may not have all the information at the ready to trade this market. So we better be ready to lighten up on our positions and sell some covered calls on the shares that we do plan on holding. Now, we did sell covered calls yesterday on our gold mining trade. We brought in some income. We've been doing that for several weeks now. Taking a measure of, we may have a lower high here on the dollar. So what I'll be watching for is a break below the support level yesterday, the lows of the 6th. So perhaps we're seeing some weakness here on the dollar intraday anyway, but we haven't broken yet. So we remain very cautious with our gold mining trade, our silver trade. And for those that are watching this channel, because we're bullish on gold, we remain bullish on gold for the longer term. But in the short term, the market is not validating our recent thesis that gold should be rallying. So while we haven't sold any of our gold mining trade or silver trade, we remain cautious, and we have a strategy for an exit plan on that position should we be proven wrong. And we want to book profits because we have substantial profits on our gold mining trade, and we do not want to allow them to slip away. So the dollar perhaps losing a little bit of steam here. 2 trading days left to go. Let's see what happens. Let's take a look at gold. Last I looked, it was weak. This is a 1-hour chart. Let's pull back. 4-hour chart. And honestly, this bull flag setup, I spoke about this yesterday morning. This bull flag setup on gold, I was very suspect of. And we have broken that lower band of support. Now, the question is, do we put in a higher low on gold, or do we take out yesterday's lows? If we take out yesterday's lows, that spells a lot of problems for gold. We haven't been able to hold the 1,500 mark. We had a dead cat bounce yesterday. Perhaps if we put in a lower high today, that sets us up for a rally into the back half of the week. Totally indifferent. Recession coming soon. You know what? We're over 11 years into this expansion. The normal expansion lasts roughly 5 to 7 years. So, yeah, you would think that we would see a recession. We've already had an inversion of the yield curve, and I watched the 2s versus 10s, not the shorter-term duration yield curve. That's already inverted. The Federal Reserve has stepped in to get rid of that inversion and make the steepening yield curve look pretty again. But it's already inverted, and typically, almost 100% of the time since the late 1950s, you've had a recession in the subsequent months after an inversion of the yield curve. In my book, yeah, I think that the Federal Reserve at current, with their actions, understand that there is, in all probability, a recession at current, or one very, very close on the horizon, and they're doing everything in their strength to prevent that recession from becoming reality before the next election. And what they don't want is gold rallying, silver rallying, and the dollar dropping along with bonds, because that doesn't look pretty for them on the next election, because that means there's a crisis of confidence in Federal Reserve notes. And that's all the U.S. dollar is. It's a note printed by a private company, which is the Federal Reserve. So gold looking weak here this morning. Again, I'm not saying you should go running out and dumping gold. All I'm doing is eyeballing, making sure that we do not break down and close below yesterday's lows. If that occurs, well then, I would be very, very nervous about gold. And again, we're not here. I'm long of the gold miners. I want to see gold rally, but I'm not going to speak my book, not like the talking heads on CNBC. It's not going to happen, ever. So what we're looking at now is silver. And again, this is another chart that is not looking wonderful. And I have a silver position. Now, the guys on CNBC, they'd be telling you right now, because they're loaded up with silver and gold, they'd say, go out and buy it, which they never do. They never talk about precious metals and buying precious metals. They want you to buy stocks. And you could see here that we are weak. We have a lower high. We've broken down below prior lows. So this is what I like to call, we're on the opposite side of the mountain. Here was the good side of the mountain. The sun was shining on this side of the mountain as we were moving up higher. Then we hit a valley. Then the sun began to rise again. Now all of a sudden we're on the dark side of the mountain. It's pretty goddamn cold. The wolves are out. And you better be really, really careful where you pitch your tent and hold your ground, because the wolves are surrounding you. Be very, very careful when you're putting in lower highs and lower lows. So be very, very careful here with silver. Longer term, still bullish. I mean, the stars are in alignment longer term, but in the very short term, if you're swing trading silver, I would not be a buyer at these levels. Wait for a pullback. Wait for the setup to come to you. We did bounce back. This last 4-hour bar, what happened this 4-hour bar? We have given it up. We're back down below support. Granted, we're only 24 minutes into this 4-hour bar. A lot could happen between now and 9 a.m. Eastern Standard Time. Monetary. Can you elaborate on that, Trent? Is that regarding your comment with regard to the drop in tariffs? All right, moving on to, let's take a look at the 10-year Treasury bond. This is the price, not the yield. And take a look at this. Again, bonds are under pressure. Yields are rallying. And we have already taken out yesterday's lows on the 10-year yield. We just did it minutes ago. Let's see if we close there. This is not pretty. Yields are on the rise. And the one problem for this market is this, is that at some point in time, Trent, I don't think the U.S. governments lose fiscal spending with the Fed. No, I agree with you. They're not going to let it happen at current. I don't think that you're going to get you may get a proposal for a fiscal spending plan prior to the elections if the Federal Reserve loses control, but it's not in the president's best interest to go offering that up yet because he doesn't have to. The Federal Reserve is doing his bidding at current. But I'll tell you, I'm going to go back to what I was just about to say. This market, here's the S&P 500. I want you to remember something here, that this market is ripping right now. But at the same time, you have yields which are rallying. They trade inversely of the 10-year Treasury bond or the 30-year. Yields are rallying. So at some point in time, the markets can absorb higher rates right now. But at some point in time, the market's going to get stopped dead at a brick wall, and something's going to have to happen. The Federal Reserve is going to have to step in and begin buying longer-dated maturities, and ultimately, that is what's going to be the fuse that lights that sparks gold and silver to move higher, those longer-term yields moving lower and bond prices moving higher. But at current, beware of gold and silver in the very short term, unfortunately. And I'm very, very happy that we sold covered calls yesterday on our gold mining trade because that's going to work for us this morning. And again, we remain very overbought here intraday on the S&P 500. Something's going to break here very, very soon. Taking a look at crude oil, and we're going to wrap this up. Crude oil rallied overnight. It was very weak yesterday. Did a round trip. We're overbought on an intraday basis. This is a 30-minute chart. Let's pull back here. Way too short term. All right, so a real pretty reversal overnight on crude oil. Taking a look at nat gas. They surged yesterday, pulling back now. They'll probably hold at this 20-period moving average on a 4-hour basis, the price of natural gas. So it's looking pretty good. On a real serious pullback, we could close this gap here at the 2.72 level. And I think that is... Oh, I want to go over Angie's List because we're along of Angie's List. They reported earnings after hours yesterday, and the shares surged. So we'll be looking to add more here if we get a continuation move higher and we appear poised to close above resistance. So members, expect a possible alert later on today on Angie's List. And with that, I'm going to sign off here, folks. I want everybody to have a very, very profitable trading day. And please join us tonight on Stock Market Futures Live. And that's where we review how we may be closing out the week on a weekly view of the stock charts. And then with members, we will be going into a members group session, a private session, where we talk about the topics that our members want to discuss. So please join us. Take advantage of the titanium level membership. Use discount code T50. Please give us a like on YouTube and subscribe to the channel. Click that bell button and select all after clicking the bell button, and you'll get notified of when we go live. Everybody have a profitable trading day, and I will talk to you soon. Be well.